We do have a live look at the Federal Reserve's annual symposium. This is in Jackson Hole, Wyoming. Fed Chair Jerome Powell making a highly anticipated speech on the state of the economy. Investors eager to hear whether he'll signal an interest rate cut, something the president has repeatedly demanded from Powell. And here now is Mr. Wonderful himself, Kevin O'Leary, chairman of O'Shares Investment and co-host of Shark Tank. Kevin, it is wonderful to have you. Thank you so much.
Thank you.
So the Fed chair facing a bit of a bind here. We've got inflation still too high for its liking, a fragile labor market at the same time. How do these realities make a call on interest rates more of a challenge? And I know you said you don't believe there'll be a rate cut this year, but what do you believe Powell needs to say or may say to reassure markets and consumers as well?
Well, the way this process works, the protocol is to release the prepared remarks, which you did a few minutes ago, and I've had a chance to peruse them. And remember, the Fed's mandate is twofold. It's jobs and it's inflation. The inflation target rate that's been in place forever is 2.5%. We are well above that now at 3%. There has been, on average, for the last 3 job reports, only the creation of, on average, 35,000 jobs, which is a little light. So you can read into these prepared remarks. What he's given a few minutes ago to the market was he's inclined to consider cuts should the data support it in the next CPI report. And so he's got a lot of data coming before the decision in September. This is his last speech at Jackson Hole, so it's a legacy speech, and he'll answer some questions. But what it looks like today to investors like me, and believe me, we've been talking to each other like crazy this morning because this matters to a bunch of stuff in all 11 sectors, including housing, but also including the cost of BB, BBB debt and everything. It's very impactful. I would argue that sometimes the most powerful person in America is not the president, it's the chair of the Fed. So right now, it looks like over an 80% chance of a 25 basis point cut in September. Now, that is not a lot. What the market wanted in housing, which is the 11th sector, the S&P, was 200 basis points, a path to getting mortgage rates down to under 5.5%. That ain't happening. And so that's the one sector that's not happy as we speak this morning.
What do you believe will be the market reaction then, Kevin?
We're going to go flat for a while, and I'll tell you why. The big debate is not just jobs, and Powell's, it's important to job bone both your mandates, jobs and inflation. The troublesome aspect, and it came out of narrative this week from both Target, Walmart, and General Motors in the automotive side, and Ford, you think about how do you absorb these tariffs? Where do they show up in inflation? Because they haven't really showed up yet, and here's why. If you're a hawk on tariffs, in other words, you think they're going to show up in inflation, here's your narrative. You look at what Walmart said. They've been eating the tariffs, their own margins. They've been absorbing them themselves and not passing on those cost increases in this last quarter to consumers. Why? They want to get more market share because their prices are not significantly, but they're much lower than Target in many product categories. So they want to steal share. And Target's going through a change in management, and that's well known and it's transparent. But at some point, they're going to have to pass them on. Same with General Motors, same with Ford, same with Target, same with everybody. And that's why Powell he's concerned, because if you lower rates into 3% inflation, which is already elevated, you're basically endorsing the new platform is not 2.5%, it's 3%. And nobody wants to hear that. And so what a conundrum for him. And you will see him walk that line in his answering the press questions in about 25 minutes. But I already know what he's thinking. I mean, the whole market knows now from the prepared remarks. He's in a head squeezer. The max we're going to get is 25 basis points. And for most people, that's not enough. Well, too bad. Inflation is still at 3%, so get over it.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.